Hey, welcome investors to the 40 Finance channel. Today I'm talking about Amazon stock here at the tail end of 2021, looking ahead for 2022. Amazon is a stock that I hold in my retail portfolio, and it's basically one that has traded almost sideways here throughout the past year or so. And today I'm going to give you 5 things to watch for with Amazon stock, 5 things to think about. Either before buying more shares, selling shares, buying shares, whatever you're doing related to Amazon stock, these are the things you need to know right now. All right, the first point here is that Amazon's retail distribution network, their supply chain, their logistics, has been sort of a drag on the company this year in terms of expenses. Expenses are going through the roof, and some of it is a build into the future. In fact, a lot of it is a build into the future. As many companies have learned through the pandemic, their supply chain had holes in it, and depending on how much uptick in demand you saw as a company, there were a lot of things you needed to do to improve your logistics network, and that's exactly what Amazon has been doing. So at a time when e-commerce has boomed and you'd kind of think that maybe, profits would be at a peak on the retail side for Amazon, at the exact same time, they have opted to invest billions and billions of dollars into expanding the capacities of their supply chain. So the first thing to really think about with Amazon as a stock and being an investor, you've got to be on board with their supply chain investments. If you're not, you shouldn't be in the stock, bottom line, because this is not a short-term investment, what they're doing now. They're building at massive, massive scale. And if you can't get behind the expenses that are associated with that, then you really need to get out of this stock as soon as possible, because those expenses are going to carry on certainly well into the first 2 quarters of 2022. And if the past is any indication of the future, when you think about Amazon's international efforts, which so far are kind of small, compared to what they're doing in the United States anyway, you can expect supply chain expenses to be a big part of the equation to build out a global distribution platform. All right, and just to illustrate this a little bit better in terms of free cash flow, you can see back here, Q3 of 2020, Q4 of 2020, and what those investments have done for the free cash flow in Amazon. And if you look at the top here, down 91% year over year, this is what investments will do to your cash flow. Also down here, you can see they highlighted the long-term goal is to optimize free cash flows. So we're in a period of significant investment, and this decrease in free cash flow is definitely one of the reasons that you're seeing this stock trade sideways right now. All right, and just to dig a little deeper, when we look at how the cash flow trickles down, you have your operating cash flow, which back in Q3 of 2020 was $55 billion, reached a peak in Q4, or I should say Q1 here. But look at this line, purchases of property and equipment, right? Minus $25 billion in Q3. That has doubled here in Q3 of 2021. And it doesn't take long to do the simple math here. When you add basically $27 billion worth of additional purchases of property and equipment, you're going to take 27 billion off this number, and that brings you down to $2.5 billion. And here we are at the Q3 shareholder letter. And the new CEO, Andy Jassy, we've always said that when confronted with the choice between short-term profits versus what's best for our customers over the long term, we will choose the latter. And you can see that during every phase of this pandemic. Scrolling down a little farther, just one example is that we've nearly doubled the size of our fulfillment network since the pandemic began. In the fourth quarter, we expect to incur several billion dollars of additional costs in our consumer business as we manage through labor supply shortages, wage costs, global supply chain issues, and increased freight and shipping costs, all while doing whatever it takes to minimize the impact on the customers and selling partners this holiday season. So for me as an investor anyway, I think they've laid it out pretty clearly, and you're either on board or you're not, and it's okay if you're not. But obviously those who stay on are expecting these improvements and investments to pay off massively in the future. All right, my second thing to know for Amazon investors is that AWS just keeps humming along, and this is a good thing. Overall, the cloud market is expected to grow another 30% in 2022, while AWS growth projections are about 35%. So they're still exceeding the norm, if you will. And while it wouldn't be totally surprising to see AWS growth slow to that sort of 30% line for the next 3 or 4 years, the thing that you can't really project is sort of the cottage industry within cloud, which is all the different applications and things that you need as your company gets deeper into the cloud. So whether that's security, cross-functionality, moving additional components of your business over to the cloud, there's a lot of ways that AWS can make money, and it doesn't just have to be acquiring new customers. Of course, we all know the beauty of a cloud service is that it's basically a subscription business. And my hunch is that the cost of performing cloud activities for each individual company will go up over time, not like in the same way that cable companies just charged more for the same thing, but because the utility components required as the cloud becomes more specialized and more expansive, there'll be a lot more bolt-on services to go with it. This is an article from TechCrunch from November 30th, and it's just an example of where some of these things could pop up that we weren't even expecting, and that is Amazon launching a preview of their new AWS private 5G network. And to summarize, you have AWS CEO Adam Selipsky. You get all the goodness of mobile technology without the pain of long planning cycles, complex integrations, high upfront costs. You tell us where you want to build your network, specify the capacity. We will ship you all the required hardware, the software, and the SIM cards. So when you think about what's happened with consumer cellular and how we're down to, 2 or 3 companies like T-Mobile and Verizon and whatnot, Amazon and the other players here are looking to build out private 5G networks that would essentially be owned by your company. And of course, Amazon would be able to bolt on those services to your AWS subscription. So in the long term, this has a potential to be a pretty big play, and it's only one of a bazillion concepts that I think will continue to be bolted on to AWS cloud integrations over time. All right, the third thing to know about Amazon stock, which is essentially a function of point number 1 when we are talking about the supply chain investments, and that is EPS projections and EPS results, frankly, are going down. And this is a fundamental problem for the stock in the long term. They're spending all that money on supply chain, and it's dripping down to the bottom line. So one of the beauty of the FANG stocks is that they're fundamentally supported by earnings per share. There's only so far the stock will ever go down in theory because they have the profits to keep their valuations in check. Now in Amazon's case, what we're seeing is that EPS level, particularly the projected level in the short term, coming down very quickly, and that's what's holding it back, in my opinion, from really going up to that next level in stock price. You see this box here, EPS revisions. This is Analysts EPS projections, and the number of up revisions over the past 90 days is literally 0. 0 analysts are projecting an increase. Meanwhile, over the last 90 days, 100%, 38 of the analysts are coming in and lowering their EPS projection for this year. And that's not really surprising when you think about all the stuff we just talked about on the investment side and how it's lowered a lot of the cash flow. And when we start to look ahead to the future, The blue lines here are actuals versus consensus estimates. Everything was great in Q4 of 2020, same with Q1, same with Q2. And then right around here in Q3 is when we got the announcement about how much they're actually pouring into the supply chain. And it's not projecting very well for Q4, particularly on a year-over-year standpoint when you're minus 75% EPS versus what you saw in 2020 before those investments began. Now, on the bright side, you have negative comps projected for fiscal quarter 1 and 2 of next year, but we can already see a light at the end of the tunnel potentially for fiscal quarter 3 of 2022, when they would be projecting to comp this number, which they just missed on, by about 100%. So there is a light at the end of this tunnel, and the good news about projections, if they stay on pace, is it would probably be in the second quarter of next year when most investors would start focusing on those Q3 and Q4 numbers for 2022. But I'll be honest here, I do see a little bit of rocky road for this stock over the next 60 to 90 days as these investments play out. Amazon has matured far past a price to sales kind of company. Yes, we're going to read the press reports and we're going to see how much was spent on Black Friday and holiday shopping and all those things. It'll be important to show progress in those areas, but this company is well into a profit cycle, and the expectation is that they will continue to grow those profits for investors like you and I. All right, the fourth thing to think about with Amazon stock is sort of the risks that we are aware of today. On the front lines, you have the fact that Jeff Bezos recently stepped away. And because of the limited exposure we've had to the new CEO, investors are still figuring out like, hey, is this investment going to pay off over the next 3 to 5 years? We don't know yet. And that's going to leave a little bit of uncertainty in the stock until we start to see some ROI from those investments. All right, the second thing from a risk perspective, this would also impact the EPS or the bottom line, is the labor costs and talent shortages we're seeing across, basically every industry right now in America. How much will this impact Amazon, say, a year from now, 2 years from now? We already know that they've raised wages. They're doing everything they can to keep the ship fully staffed. But what is the prolonged effect from an EPS situation, profit situation, with the talent shortage that's going on here in America? And remember, with Amazon, you have frontline jobs or blue-collar jobs, however you want to look at it, in the distribution centers and perhaps the truck drivers. You also have high-end developer jobs where you're battling against the Googles and the NVIDIAs and everybody else out there. So I, for one, feel bad for anybody who works in an Amazon human resources department who has to recruit for all these things because there is a wide range of talent that's required to run a company this size. We'll have to see if conditions improve in the economy and to what extent Amazon is willing to overpay to fill butts in the seats. All right, the other prevalent risk factor I'd say that's out there is just inflation. And what does it mean to a company that is in retail sales, right? How will inflation impact consumer purchasing habits as they relate to Amazon? How will the end of many government stimulus programs, how will that impact the sales forecast for Amazon? These are all things that, basically every retailer is going through and asking the exact same questions. If Amazon has at least one thing going for them in this area, is they sell a nice broad mix of necessities versus, nice to haves. So I think that if you're a person like me who uses Amazon for even simple purchases like tools and trash bags and things like that, then I feel good that customers like myself will continue to buy just for the sake of convenience. But what we don't know yet is how the higher margin products will do when you start talking about things like, say, furniture, office products, stuff like that. So it is a concern. I will say the concern is not limited only to Amazon, but it is something that could impact sales and profit numbers for the foreseeable future. All right, so on the bright side of the risk spectrum, I would say one thing that's going for Amazon is they do not operate in China. They do not make sales or ship to China. Obviously, they have a ton of companies that sell their wares on Amazon, but not having the China risk in case something does spin up between the US and China from a government or sanctions standpoint. I personally think that it's a good thing that Amazon does not do business in China as of right now. All right, the fifth thing to think about with Amazon from an investing standpoint, I would say, is the optionality that this stock offers. And you can see what I've highlighted here. The Amazon's set to become the largest US delivery service by early of 2022. Surpassing FedEx and UPS. So this is a business unit that they obviously built up for themselves to use, but it will become interesting if they decide to go after some of the money that FedEx and UPS makes. Obviously, they lowered costs by becoming the largest US delivery service and owning it in-house, but at what point do they start offering it as a service to other companies? And that, of course, could bring in some extra revenue. All right, the other play that some of us haven't quite figured out yet is what Amazon will continue to do in the streaming business. Obviously, that's becoming a crowded space, but they have a nice setup with the Amazon Prime membership and some of the streaming movies and TV shows that they offer. What becomes of that in the future? Is it always just going to be a free add-on to Prime, or is it going to turn into something that becomes much bigger than we initially thought of? That's an aspect of Amazon's optionality that I'll be watching. Another thing to think about with Amazon optionality is, of course, their ad business. You know, in the past, this has really been relegated to advertising across the Amazon domain, right? Whether it was prioritizing search results, having different landing pages for your products, stuff like that. But if you think about the streaming aspect and you think about the things like Amazon Home, and they're starting to build their own flat screen TVs, all those components are reaching deeper and deeper into consumers' world. So I don't think it's very hard to see the ad business continue to grow at a healthy pace in the future. How big does it become is really hard to tell. But if you're placing bets on it, I would say 5 years from now, it will be a lot more than just product advertisements on the Amazon website. And finally, on the optionality side, you have to start thinking about international. It's been a very quiet segment of Amazon operations. In fact, it was net negative in the last quarter. But what happens when some of the European nations, Canada, perhaps Mexico, when some of those countries mature to even say half the level that we're seeing with Amazon in the United States? How big does Amazon become if you start to see that progression in those countries to basically becoming a worldwide e-commerce and supply chain provider? It could certainly mean big, big things for stockholders who are willing to stay in the stock for 10, 15 years. All right, last thing we'll do is look at tip ranks to see what the best performing Wall Street analysts have to say about Amazon and their price targets for Amazon stock. Stock price today is $3,300. And we've had several updates over the past 29 days, so we'll start there and go forward. And you see here the most recent, which was 2 days ago, 4,700, which is 41% upside. And pretty much across the board here, you've got low 4,000s, 47, 4,500 on the high side. So when you take into account that the S&P or the SPY will probably go up about 25% this year when it's all said and done, there's definitely some opportunity in Amazon to beat that number for 2022 as an individual stock. Obviously, these projections are opinions, but I certainly think that the low 4,000s by the end of next year is pretty obtainable. To be honest with you, I thought they'd be in position to hit it early of 2022 as opposed to later. But when those costs came out in Q3, you saw what happened to those EPS projections. So you are sort of getting a company now where the projections and the momentum, if you will, are at a lower point. I wouldn't necessarily say that Amazon's on sale at 3,300. I think if you're looking for the bottom, you're looking for a broader market event, and you probably want to wait for $3,100, $3,000 if we saw a major market meltdown. But I'm not sure you're going to get much below $3,100 if you're just waiting for negative headlines about Amazon by itself. It'd probably have to be something bigger going on in the market. All right, investors, those are my 5 things to know about Amazon stock right now heading into 2022. And as always, please give the video a like, share with your friends if you enjoyed the content. We will see you on the next video.